All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here just over an hour this morning, and we're looking at a market that's trading up near its highs for the morning, up about 16 points here on the S&P. The Nasdaq is trading up, from a percentage standpoint, significantly greater on the back of Alibaba, Apple, AMD. A lot of strength in those areas there, and helping to push things higher here in tech. Big leaders out there today are the tech space, the industrial space, and the consumer space. The consumer discretionary space up about 1% here this morning, but not a whole lot where I'd look and go, wow, the market's remarkably different because of X, Y, and Z or anything like that. I don't think it's that kind of morning. Here we are with the SPY. We talked about what would be kind of bullish is to see a gap up, see it sell early and then rally back. That's what we're getting, right? That's what we're getting so far. I don't think the rally is broad-based enough to say, hey, you know what, bulls are in the clear, let's go. We're not seeing any real metric changes, but we are getting that type of price action there, and gonna be definitely interesting to see this afternoon post Fed. I still have my XLF, and I'm not going anywhere on it. Financials lagging a little bit here today. Bank of America down about 1% here as it's dropping below its 7-day moving average. JP Morgan, which has had some relative strength, is slightly lower here today, but nothing really to write home about with any of these, from Citigroup and whatnot. But holding my XLF here, and going to hold it here through the Fed, and most likely into tomorrow and perhaps even Friday, and look to take it off at the close on Friday, and go from there. Provided we don't see some remarkably different price action, come into it. All right, so that's the overall market. We saw small caps lagging early. They've made a little bit of a comeback, and it's one of those where the relative size of the moves just aren't big enough to really see any material difference. But it is definitely something where there's a positive catalyst for the industrials, a positive catalyst for tech, and tech having lagged here yesterday. Now, what are those positive catalysts? Those positive catalysts are earnings, right? Those positive catalysts are earnings. And this is when we talked about before this earnings season, that this would be one of the more important, most interesting earnings seasons that we have seen in a long time here in this market. And it has definitely so far lived up to be that. It is one that, look, I know the natural tendency is, Triple M, it's up yesterday. It must have been a great report, right? I mean, come on, for the stock to go, it must have been a fantastic report. AMD, it's up $3. It must be a great report, right? I mean, that's the natural tendency. AT&T, this must be a disaster of a report. I mean, this just must be terrible. I mean, come on. Who wants to, obviously the report's terrible. Just look at the price action. But the reality is that's not the way earnings work. And for much of 2017 and early 2018, we went through earnings periods and earnings seasons that were phenomenal, where the numbers and the metrics were improving, they were strong, and they were showing growth going forward. And what happened? Well, a lot of those companies actually gapped down on earnings. They would come out with a great report, fantastic numbers, doing everything right, no real hole in the earnings, and the stock would gap on down. And it gets sold off for a day or two. And then it would just go back, climb back higher, get up to new highs, and keep on trucking. What happened? What's going on, right? Well, when it comes to earnings, expectations mean a lot. And I'm not talking about, the Wall Street consensus expectation of $35.2 billion in revenue. No, not that expectation. But the overall general sentiment of investors going into something. When we had Triple M earnings yesterday, right? And we had talked about Triple M, and it's one that there's some serious fears here, some serious worries and concerns after last earnings season. Back here in October, we saw a big gap down. We saw some kind of cracks in the earnings armor. There's some big worries going into this earnings season. Did they blow the barn doors off yesterday? Did they come out and say something magical about the company being this great, grand, and wonderful going forward? They didn't. In fact, we looked yesterday at their earnings numbers. This is their revenue, right? I mean, their revenue came in just about in line. Their earnings per share, just slight beat. Right? But on a revenue year-over-year basis, I mean, it was one where there was they actually had a small decline in revenue year-over-year. You can see how the revenue has been declining in the last 2 quarters. Now some of that is cyclical, but that hasn't always been the case for Triple M. That's had quarter-over-quarter growth, for some time. This wasn't the type of earnings report that just, wow, all right, they're operating on all cylinders, let's go. This is a pretty average to subpar earnings report. And it's the kind of earnings report that a year ago would have sent the stock down 10%. Would have sent the stock down big if they had done this a year ago in a different market environment. But you think about the market environment, and there's an incredible amount of fear out there. Right? There's an incredible amount of worry. And so what happens when it comes to earnings? What do earnings give? Earnings give information. What does information do? Information creates certainty. And so the markets that haven't experienced earnings since back in October, right, have gone through a heck of a lot since October. All these ups and downs, a big drop in December, big pop here in January, right? Earnings, the market's gone through a heck of a whole lot throughout this time period since they've heard from many of these companies. And so hearing, it creates a sense of, okay, well, we know at least how bad it is or how bad it isn't. We now go from unknown to known. Now, that does a couple things. Unknown to known creates a little bit of a short squeeze, because what happens? The short sellers who were betting on something maybe didn't get it, and so they start to pop on out. And that creates a little bit of upside. The question is it chaseable upside? Is it upside that investors are going to look at today, tomorrow, next week, and next month and go, hey, I'm buying based on that earnings report? And the answer is absolutely not. The answer is absolutely not. We talked about this with Western Digital, right? Yeah, the earnings, great. We talked about the expectations going into earnings. They were so bad. The expectations were so low. Western Digital, it wasn't a great report. It wasn't a fantastic, just blow the barn doors off report. Some could even argue it wasn't even a good report. But we saw the stock react up big. And I commented that morning, this isn't something to chase. We didn't see the fundamentals improve. And when it comes to the earnings this season so far, there have been more positive upside reactions. But the fundamentals overall have not improved. And I think that's a very important and very key takeaway as we go forward and as these markets unfold in the next 2 to 3 months. And what it tells me is that this is not going to be a runaway locomotive market unless there's a major headline change, meaning resolution of the trade war with China. But that's basically what that means. Barring that, right, we're not talking about stocks that, I think have a ton of upside. Now, one exception, IBM, we saw IBM's earnings. Fundamentals improved. The fundamentals on IBM improved significantly on their earnings. But Caterpillar, Triple M, even Apple yesterday reported after the bell, and it's up about 5%. We talked yesterday, going in, the upside is up here around 162, 165, right? The downside's down here around 140, right? And we're seeing it realize the upside. But go take a look at the report. Is it a great report? Is it this report just kind of blowing the barn doors off? This is fantastic? It's not. In fact, it's nowhere near as good as bad as it was last quarter, right? You can see earnings per share pretty much in line with consensus. They beat by a penny, and a revenue pretty much in line with consensus here. But one of the reasons they're not, dropping like a rock is they didn't come out with some of the same stuff that they did last quarter in terms of some of the warnings, some of the, some of the uncertainties, some of the problems, right? And, it's really interesting. I posted it yesterday after the bell on the feed and just Tim Cook's comments. And, one of the things that Apple is setting up and doing here is, they are changing investor mindset and the investor approach to the company. They're changing it from, hey, how many are using our products, right? How many are using our products versus, how many new iPhones did we sell, right? Because look, there are a lot of people out there, they're just not buying the new stuff. They don't need to, right? They don't need to. My phone that I bought 2 years ago, it still works fantastic. Great. Do I need to go in and upgrade? I could, but is there any real need? No. And we're seeing consumers do that a lot. So the iPhone sales aren't what they used to. And so Apple's trying to change that mindset from, iPad, Mac sales, iPhone sales to how many users do we have? And we continue to grow our user base. We continue to grow the money that's coming in from our user base. It may not be coming in from the iPhone sale, but it's coming in from iTunes. It's coming in from other areas that are very profitable. But you can see that quarter over quarter, this is or year over year, this is a decline for Apple. Right? This wasn't a hey, we're improving. This is a decline in revenue for Apple. Now the earnings went up over the same year period, right? They managed to grow the earnings, but it was on declined revenue, and that is something that is an erosion of fundamentals. And while it doesn't mean, hey, the stock has to go down or it's in trouble, it's not the type of thing we saw in January of last year with Apple. And I'll just come into a weekly chart where January Apple, right in here, and really kind of comes out great numbers, beat year over year, everything else. And yeah, the stock didn't exactly, just boat race higher or anything else like that, but there was an improvement of fundamentals that's set up for a strong rally. And one of the concerns that I have looking at earnings so far this season is overall there's an erosion of fundamentals. There's an erosion of fundamentals in some of the key areas of the market and some of the key stocks in the market. Now, it's an erosion that could change very quickly, right? It's not going to take much to change, but it's an erosion that is happening. And I think that is something that, investors are going to have to, grapple with. They're going to have to, deal with here over time. And I think it's going to create a market that just has a little more volatility in it over the course of the next 2 to 3 months than, what we have seen in past years during this, kind of February, March, April time period here. Okay. AMD, really good example. And this is one that, me, I'm very bearish on AMD. I've been looking for an opportunity to short it. Haven't taken that opportunity here yet. Looked at the options this morning. This has some short squeeze elements going on here to it. What's interesting is the options yesterday into the close were pricing an 18% move in the stock. That's what the options were pricing, an 18% move. And so we have a big move on AMD, and it's 16%. It hasn't moved yet what the options kind of priced in here for it in terms of total move. But is to the upside here, in just the way the action is this morning. It's very short squeezy. From the moment they reported yesterday, and this is a good example of a company that reported and their fundamentals are actually weakening. But we are seeing short squeeze price action deluxe. You want to go see what short squeeze price action looks like? Just go look at AMD since the time they reported yesterday, and you see there are shallow dips, and some of those dips can be pretty rapid. But every little shallow dip, it doesn't have a follow-through. They all get bought up very, very quickly, and that is continuing here for AMD. And, it's something where I will be looking for an opportunity to get short, but generally, I got to let the first day play out and let the shorts at least get squeezed on the first day. And if it gaps up the next day, I need a sign that the short sellers are done being squeezed. And so far, that isn't the case. And, it may not be the case till 25, 26, 27, realistically. But it's not because the fundamentals improved, right? But anyway, AT&T, very interesting report, and one that I went through it, and this is the last one that I went through here, and before I got on video, and I'm going through it, and I'm looking at the comments and everything, and the numbers, and just sitting here going, this is really interesting. The fact that it's down. And the fact that it's pushing on lower here today. The natural assumption would be the earnings are pretty bad. The earnings are pretty terrible. But here, if you look at the raw numbers, let me pull it up for AT&T here. You can see that the earnings, they beat by a penny. Okay, they beat by a penny, and they improved over last year. Okay, so beat by a penny and improved over last year. And then look at the revenue growth relative to last year. I mean, the revenue growth relative to last year was very sizable. And you look at the revenue growth this year, I mean, it's very sizable. Now, some of that's acquisition-based, but we are talking about a company that's, growing revenues, growing earnings, which, we don't see in some of the other stocks that are up big today. But AT&T has that. One of the concerns about AT&T has been the dividend. And the fact that are they going to cut the dividend with some of these acquisitions? And the CEO is very forthright in saying, no, we're not going to have to. In fact, we're raising the dividend for the 35th consecutive year. And so, this whole, are they going to cut the dividend fear? Well, you know what? They haven't cut it for 35 years. They've raised it, and they're still talking about still doing that. Now, they do have some excess debt with some of these acquisitions. They talked about a path to clear out some of that debt here. But we're talking about a company trading at a forward PE of 8, a dividend yield of almost 7% now. I mean, almost 7%. AT&T is barely trading above book value. Book value is 25, and barely trading above that. And it's trading down here because there are worries, there are concerns about the acquisitions, and about how they're going to come into play. But we talked about AT&T right back here, and fundamentally, what happened and what went on, and yes, the earnings reaction very negative, but it's a very good report overall. There's some very big positives in that report overall. I still think AT&T is the same thing. It's very investable right here if you have a long-term time horizon, right? It's something that you're not looking to play trader on, and you're not going to get knocked out if it dips a few bucks, and you're not going to get overly excited if it rallies a few bucks. but it is something where you can sit with a 6.5 to 7% dividend on a company that's raised its dividend for 35 years, that has growing cash flow. So yes, they have some debt, but their cash flow is improving and it's growing to be able to manage and deal with that. I think it's one of the cheaper stories in the market. One of the stories that so far is not played out to the bullish thesis where, the bulls are willing to put a high multiple on it. But ultimately, that's what I expect will happen. We will see a period of about 4 to 6 quarters where the bulls will take and say, "Hey, you know what? We're gonna run with this thesis and go." The bear thesis kind of played on out, and that's that's what I expect, and that's what how I look at AT&T, and we'll continue to look at AT&T, and I think you can actually look at it this quarter and like it even better than right back here in July. I know the stock price is about the same, but it is one where I do, we are seeing all signs that the dividend is safe, but we continue to see this stock sold pretty much on any kind of news. It is sold, pretty rapidly on any type of earnings news that has been coming out or has been playing out in the markets here over time. It is one where it is very clear that AT&T is significantly cheaper on a fundamental basis than Verizon. Verizon doesn't have the same debt concerns, but this is one where Verizon yield is not as good as AT&T. In fact, Verizon's yield here is about 4.5%, so it's about a 2% difference. I expect the yields to come back into line, right, and come back into parity, where the yield on AT&T, the yield on Verizon are about the same, and so that would mean what? That would mean that over the next while, AT&T stock would have to outperform Verizon stock in a very significant way. And, if you're looking at a combo trade, I think today is a perfect day to put it on, where you buy AT&T, you short Verizon, not because you're bearish Verizon, not because you're uber bullish AT&T, but simply to play that gap. And that gap kind of coming in. So anyway, that's, as we look at some of the earnings, and again, these aren't all. There are a lot more earnings out there. Junipers of the world, the Boeings of the world, are out there. I think Boeing's earnings here, and I haven't gone through the call or anything, but just the raw numbers, if you look at Boeing, you talk about a company that's, continues to operate on all cylinders. Look at the earnings per share beat. They beat by almost $1. That's not unheard of for Boeing. They did it last year. They beat by over $1. But to do that 2 years in a row, okay. But look at the revenue beat. They brought in, historically all-time high in revenue. This is a company that is putting out numbers and growth elements that kind of remind you of some tech momentum stocks. And this is a big multinational industrial. And, it is something that I think reads very well for Boeing. I don't think it reads into Honeywell or to Triple M or some of the other industrials here, but I do want to see the call and see where some of those items are, before kind of making that type of a statement. It's definitely a different report than Caterpillar, and it is something where it looks very much like an outlier rather than a trend. And if that's the case, it's an outlier rather than a trend. It's going to be a big outperformer as it goes forward from the rest of its group, from the rest of the sector there. All right. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.